Yeah, in terms of for the quarter, definitely below. I mean, but
a little disappointed then with the iPhone sales.
Yeah, I mean, in terms of iPhone sales this quarter, I think, they're definitely a little disappointing in terms of what we saw. But again, the drum roll, the big focus is in terms of guidance. I think there were worries that they'd guide below the street in terms of where they were from bracketing, and ASPs is the key here.
I'm looking at the guidance too, Mike. Is that disappointing?
It's light on revenue. What you have to, I guess, tease out of it is just how much of that is Apple conservatism. They're kind of known for maybe lowballing, but the street revenue forecast is at the very upper end of the range.
It is a $4 billion range, though.
Yeah.
The guidance for the fiscal first quarter, 89 to 93 billion, Courtney.
Oh, yeah.
Okay, good, bad? Because iPhone missed a little bit of what Dan's estimates were.
It did, but I mean, the numbers are coming in strong here. It's coming in. We're looking at a lot of the FANG stocks here have actually come in somewhat strong, and they're actually trading a lot lower. I think we're going to see the opposite here with Apple. The earnings are coming in strong. I think we're going to see the stock go further
higher. It's moving lower now after hours.
It is right now after hours, but I think we'll see some of that taper off.
Ed Lee, what stands out to you?
Services. It's my favorite line item. It's this most stable. It's the most predictable. They're hitting. See, if this thing worked, I'd put this up here like this. But we're looking at paper now. 10 billion. I think the 17% growth rate was about what I think the street was looking for. I think they're going to be on pace to actually beat their projection for what they want to get to in 2020. That, I think, is going to be the sort of the most important line item in the next 12 to 18 months, at least, in terms of how they sort of can extract more dollars out of sort of maybe slowing or flattening or ameliorating iPhone sales. They just need to get more dollars out of every user. It's a pretty big network if you think about it, 800 million.
I wonder, though, Ed, and again, I'm going to ask you to opine on this. We've gotten to this world now where we're seeing people upgrade less as phones get more expensive. Right. We saw average selling prices at $793, a little more than the market expected, but yet the number of iPhones sold, a little less. Are we getting now into this maybe permanent cycle of you're going to pay more, but you're not going to upgrade as much? And that's not good for Apple. They want transitions.
They want transitions, but I think the average selling price, I think that's telling, though, because I think what more people are doing, they're willing to pay more, but I think a lot of them are taking advantage of the sort of the Apple payment plan, where they're not paying all of it up front. They're just paying basically on a monthly basis. It's a no-interest loan. So it's sort of like if you're a stock trader, it's sort of like leasing a Bloomberg terminal in a way. These things are becoming that much more important devices to have. I think people are willing to shell out every month if it just means that they're that much more connected, have that much more value out of all the different apps that they're getting out of it. I think that's the direction they're ultimately heading in.
So Ed Snyder, we'll go to you. I think you've been less positive on the stock. It's moving lower 5% after hours. You got record profit, record revenue, higher average selling prices, higher services, maybe slight disappointment around guidance and overall iPhone sales. What do you think the stock's reacting to here?
Well, I think it's what we've been talking about, and everything you've said on the program so far, it kind of tracks that. You can keep selling higher priced phones to your installed base. If you don't grow your installed base, you're not going to, eventually you're going to limit out on top line growth anyway. And that's what you're seeing. They've got flat unit volumes with last year, which is not good. Why? Well, because last year they didn't release the 10 until December. So in the September period last year, one of their biggest flagship phone didn't even ship. And so you're now flat with a weaker September, and then and tacitly, overtly admitted in this guidance is they're not going to match what they did December because they've already released their flagship model. So, it's not a disaster. Apple's doing fine. As I said many times, but you're treading water here. You're not growing your user base. You're seeing flat to slightly down unit volumes year on year. You can talk about software growth. You can talk about services growth, and that's great. I mean, if you want to sell to that cul-de-sac of users, but you got to grow it sooner or later.